Okay, so I believe this is it. All right, 6 people in here. Okay. Can everyone hear me okay? That's what I want to make sure. Right. Allow a couple more people to join, then we'll get started. Six people. Right. Yeah, I have. Ben finally got it working. Luckily. 7 people. Maybe get to like 10. Probably won't even get to 10, but what day is it? Monday, midday. Yeah, not even sure if a lot of people will join. Nice, make sure I can share my screen. That'll be the next thing. Right. Hello, guys. Hello. Let me put up a little story. Much love from Ghana. Wagwan. Let's go. So, I want to be in it, right? No. Right, let me share my screen. Share screen. Screen 2. Share. Right. Okay, there's about 20 of me at the moment on here, but can everyone see this screen though? Like, just to make sure everyone can see my screen, yeah? That's what we want to make sure is going on. Let me just take a photo of this. Right. $14 people. Let's get it. Let's get it. All right, cool. Everyone can see my screen. That is sweet. So I'm not going to be able to see myself when I'm speaking or the comments. So I have to keep jumping back and forth. That's going to have to do it. So, right, basically, I'm just going to do a quick live stream. I'm going to try to do this at least once a week. Just do some like little tips and some chart work, some breakdowns, and then any questions you guys have as well about anything trading related. Doesn't have to be what I'm talking about. Just feel free to ask, and I'll try my best to answer it. But going to be doing some chart work, not giving away like too much because you guys know we have a premium group and that. So it's just trying to help you guys along the way. For anyone that's maybe starting up or just trying to find consistency, you might not be might not have it yet. Just maybe these tips might be able to help you. So yeah, let's just make sure no one's asked any comments yet. Sweet, how many we got? 14. That'll do. Right. So I'm going to talk about kind of looking at structure shifts, looking at buyers and sellers within the market, looking for reasons when we don't enter trades and looking for when we will enter trades. And then we're going to try to combine confluences together to kind of make a very, very probable trade. I mean, I'm going to start with one that I post on Instagram. It'll be nice to kind of do a run through on that to start with, in case you saw the Instagram post, you didn't really get it, or you want like a breakdown of it. So I'll do that. I've got 3 examples of kind of chart breakdowns I quickly just saw that I'm going to talk about and just kind of do it off the back. But yeah, without further ado, we'll get straight into it. No ask anything. Sweet. So this is Euro GBP, Euro Great British Pound, and what we're going to try to do is look for a trading opportunity on it. Now, the first thing to kind of notice about this pair is there's no kind of real direction on the higher time frame here. We're kind of just ranging, we're bouncing between like resistance and support. We're kind of heading sideways. There's no real kind of trend within the market. You can see we're bouncing support, bouncing resistance, but once we get to the lower time frames, you will see there's like more of a direction and stuff like that. So for this one, we'll start on a daily time frame, and what we're looking for, I'll get rid of that to start with. What we're looking for to start with is areas of support and resistance, or areas in the market where buyers are clearly stepping in, or where sellers are clearly stepping into the market. So where I would see this right here is through here, and I'd usually draw a zone on a daily time frame and below. We could say that this right here is being used as a support level, not only a support level, but resistance over here. So it's being used as resistance, and then it's been broken through, strong daily candle. Let me highlight it. So this candle right here was the kind of takeover by buyers, where buyers took control, and then ever since then we've just been breaking to the upside and now using this level as support. So sellers tried to step in, they weren't able to do so, so price continued to the upside, and ever since, price has just been using this level as support, where buyers have just been stepping in. Now, what we're going to talk about is how can we use this level to then look for a buying position off it, because clearly you can see where price has actually tried to bounce off it before, but we haven't seen the buying momentum that we would expect. So for example, here, what candlestick pattern is this right here? Those 3 candles, that's a morning star, basically a pattern right there. So for people to see this morning star, to see this doji off of a similar level, what are people thinking? People are thinking the same thing is going to happen as we saw here, where price just moved to the upside. People are thinking the same thing is going to happen as soon as we touch this level. So people are just entering buy positions off of here, thinking that price is just going to continue like it did here to the upside. But we know that's not the case. It's not going to be that easy. We need to really break things down on the lower time frames first, to then kind of stack our confluences to actually enter a buy position. And there's reasons why price didn't go up from here, and those reasons come down to the lower time frames, where, as you can see, ever since here we are clearly downtrending. And the first thing I kind of notice on this daily time frame are the wick projections to the upside on like a lot of these candles. Let me just delete this. Like you can see like how strong sellers are in this market, because you can see we've got a lot of wick projections, and all wick projections mean is price tries to come up, but sellers just take control and close to the downside. So you can see all these wick projections to the upside, like they're all over the place. A lot of wick projections going on. So we know sellers are clearly in control of this market at the moment, and what we're waiting for is basically like a market structure shift to take place, so we can have evidence that price is now going to continue to the upside. So we'll drop down to the 4 hour now, and you can see this in a lot more detail. So market is clearly downtrending, and what we're kind of waiting for is kind of just a structural shift. And I'm going to draw in a trend line. Now, the reason we draw in trend lines isn't to kind of trade off them as such. It's more just as a kind of to visualize direction, to kind of give a little, just to give the eye, the view of where the market is heading, and just give it that kind of the steepness of how strong the trend is and stuff like that. Because we know that you can draw a trend line anywhere, and you can say any trend line is valid, but you need to be careful with trend lines, and it kind of needs to be like the last thing you draw in, or if you are drawing them in, just use it for a directional kind of bias. So I'm going to draw in a trend line here just to kind of get an idea of the direction. So I could draw one from, let's say, here, and we can say that the market is downtrending. Now, it's not going to be exact, but we can draw something like this, because it is still using it. Trend line's not going to be exact, just to understand the direction of the market. Okay, it's not wick to wick, body to body, none of that bollocks. Like, we draw it how we want just to understand the direction of the market. We've got lower highs forming all the way down it. We can just say that this is just signifying and visualizing the direction of this market, which is clearly downtrending. And until we get some kind of clear structure shift, we don't want to be buying into this market. But what else can we notice from here? And what is kind of giving us this evidence that the market could potentially be shifting, be seeing this shift? So we're obviously making lower highs. We're also making lower lows, which is, let's get the pencil out, which is this. We're making lower lows as well. But then what does the market fail to do? It fails to make a new lower low by pushing through here. And instead, we make just a double bottom here. So this is like a double bottom here where price is clearly struggling to break through this level. Now, this doesn't mean we're going to be buying straight off this level, because we've still got roadblocks in the way. We've still got interest from sellers, from the market downtrending, from the lower lows, the lower highs, and stuff like that. Just see, make sure no one's sweet. What, 17? Okay. So we're just basically trying to stack confluences here from sellers and buyers. We want to put ourselves in a selling perspective, and we want to put ourselves in a buying perspective. So the reason for sellers to be in this market right now is because the overall trend is still down. We've still got this trend line in place, and we're still making lower lows and lower highs. Well, we haven't made a lower low. We've made an equal low, but we're still making lower highs. And you can see that the market is still considering to head down from here. So what else can we draw in now? And for buyers, we've got this double bottom. We've got a rejection of this level, and that's basically it. That's all we've got for buying at the moment, and we failed to make a lower low. So for me at the moment, it's like equal. Buyers and sellers are just, they're battling out at the moment, and something is about to happen to give us that click, that confirmation, that directional bias to then look for a trading position. And from here, all I would be considering is two options, because right now it's equal between buyers and sellers. I would be considering either a break below this level, followed by a pullback to then see that, because what this does is it wipes out the interest from buyers, because this level no longer holds, and that's the only interest we have at the moment from buyers. So once we surpass that and we get through that, it's all interest is on the selling momentum. So that's what we're looking for sales. And at this moment in time for buyers, what we're looking for is an impulse to the upside, followed by a pullback, and then something like that. So that's what we're looking for. So other things that we can put in place is areas of sensitivity. Now, this is on the lower time frames where price is using these pivot points for buying and sellers. So for buying and selling, so whether it's support, whether it's resistance, or both, it's areas of sensitivity where price is bouncing in between these smaller levels. So this right here is a big daily support. However, through here, I can see a level in the market that is being used as support and resistance. So we can say here, price is using it as resistance. We can say here, price has been using it as support, and now twice, price has been using it as resistance once again. So this is an area of sensitivity within the market that we know needs to be broken. If I hop back up to the daily, what this looks like on a daily time frame, so ignore that big candle, so for some reason it's done this, but what this looks like on the daily time frame is we are rejecting it. So that level I've drawn in, you can see these daily candles are wick rejecting it. So this is like a lower high on the daily time frame. So all that's happening at this level in the market is it's a waiting game to see what's going to happen here. Are sellers going to be able to hold, or are buyers going to take control? And all it's a battle between is buyers at this level and sellers at this level. So if these buyers are stronger, the market's going to push higher, which it does. You can see it's happened. Or if sellers are stronger, they're going to push price below this level. And either way, we're waiting for that evidence. We're waiting for that evidence to take place, so then we can react to it. So you can see now that price has broken above here, but let's jump down to the 4 hour so we can see this. So this price is being used as resistance. Let's play price and see what happens. Okay, so price breaks through this level now. Let me take it back a little bit. Let's take it back to here. Okay, so price breaks through this level of resistance, and now we've got our buy bias. We've got our directional bias to kind of start looking for buy positions now. Let's see if anyone's had any questions. Nope. So yeah, so we're looking for buy positions now. And this is where it gets important, because it's entering the market. That's the most important thing, right? So you can get the directional bias right, but now it's all about entering the market and understanding where to enter, where to put your stop loss, and everything like that. So now this has happened. We need to think, okay, where can price pull back to? And we're thinking worst case scenarios. We're thinking, where should we put stop loss? And stop loss is always in a position where we're going to be wrong. So that's one thing to take into consideration. So right now, where is price going to pull back to? Let's draw in something, because right now, what can we see is going on in the market? If I jump down to the 1 hour, we're making this morning star right here. Now, this is interesting, okay? So if I highlight this, something like that, that is a morning star. That's a morning star formation where people are entering buy positions from that. People will be entering buy positions from that, no doubt. So why might people be entering buy positions off that? Well, if we was to put a level through here, people might be seeing this as a level in the market where it's also being used as an area of sensitivity. We've got area of support, we've got area of support, and we've got area of resistance. And now people are thinking it's going to be used as an area of support again. So how do we know where price is going to pull back to? How do we know it's going to pull back? How do we know it might pull back to here, or it might pull back to here before continuing up? And what we need to do is add something else to give us that higher confluence or higher probability of it pulling back to one or the other. So let's get this involved. Let's see what we can do. And we like to draw in Fibonacci level. So if we were to draw our fib from swing high to swing low, we can see that this level down here of sensitivity basically lines up with the 50% and the 61.8%. So worst case scenario, we'll say 61.8%. We'll put our stop loss below there, and we'll allow price to pull back into this region, because if you're looking up here, there's no key fib levels at this zone. I mean, some might say it's scraping the 38.2. Some people might rush into the market thinking, oh, it's close enough to the 38.2. Let's just enter, and then we'll see what happens now. But by looking at this, we can expect price to have a much deeper correction back to the 50% or 61.8. Worst case scenario being the 61.8. So if we do enter beforehand, we know we need to put stops below the 61.8. So by knowing that, if we are to even enter here, if people are entering here, you need to be putting stops below the 61.8. And as you can see, that's a ridiculous stop loss. You're not going to be doing that. So just by understanding that, you're not going to enter the market up there, because you know in the back of your mind, there's a high probability of price pulling back down to this level. So let's have a look. So we know people are entering the market too early right now. Let's get rid of this and let's see what happens. Okay. What happens? Price comes down and rejects the 50% Fibonacci level. Okay, so that would have been a nice entry of the Fibonacci using our entry strategy, which I won't say, but that's how let's say we would have entered off the 50% rejection. Let's say something like this, would have put our stops below the 61.8. Key tip, not on the 61.8, clear of the 61.8 in case we decide to wick it, jump through it a little bit. That's always a key thing to do. You don't want to put it right on it, because if it touches it just by a pip, you're going to be annoyed. So keep it clear. That's what we like to do. And then just target in higher positions, whether you want to target back up to the top of the correction or further. Let's say you want to target here 2.5% back up to the top of the correction, take the profits, or whatever you want to do. Trail your stop loss with it. We'll not go too much into that, but that is how we enter that one. But let's continue and see what happens next. So we've now reached this resistance level in the market. Let me just actually ask, is there any questions on that before I continue? Got my tea in my mug, which is now cold. Oh. No questions. We'll carry on then, crack on. So let's move forward. I can't remember what happens, but we'll just keep going with this pair. Whether we did have a higher take profit. So sorry, let me get into this. So let's say we entered there, stops there. Let's say we did target up here. Now, as you can see, price is clearly struggling to get through this resistance level within the market. And why is it doing so? It's because it's actually being used as a sensitive area. It's being used as a level where price is using it as support, price is using it as resistance, and now we've had like the third and the fourth. We can say it's a sensitive area in the market. So with that position, if you're not taking profits at this level, once you start to see that rejection, or you need to at least be moving your SL into profits, because you don't want to see this good trade come all the way back down and stop you at break even. So either take profits or secure some profits, take partials. But yeah, that's one of the most important things is trade management, guys. So that's what you want to be doing. So what next? Let's have a look how price is going to react from here. Let's play. Price continues. Okay, price continues to the upside. Didn't want it to go that far, but let's see. So now we're clearly uptrending, right? The trend is clearly broken. We're clearly seeing some kind of reversal within the market. Let's see what we can do from here. So we've had this impulsive move, and so once we've had this, where are we expecting price to pull back to? Remember, we want to look for the most probable place where price is going to pull back to, and then using that most probable place to be making sure stops are clear of that. So yeah, let's talk about it. So this sensitive area through the market is clearly an area that price could pull back to. So X marks the spot. Let's put that in, and then let's use our Fibonacci from swing low to swing high to see if it lines up with a key fib level. So yeah, straight away we can say that I reckon, again, exactly the same here, in between the 50 and the 61.8% Fibonacci level. Worst case scenario being the 61.8. So again, putting stops clear of the 61.8. So we're expecting to come down to here. We're looking for our entry signal, for our reason of entry. But then the most important thing is the execution, the SL stop loss positioning. Because the last thing you want to be doing is for a trade to be hitting your stop loss and then you regretting not still being in that trade because you should have put your stop loss bigger. I mean, it's happened to me and Ryan like loads of times, and we're only human. It's going to happen, but you really want to be trying to minimize that and be putting your stops in a safe place. It can be very easy to tighten it to get a bigger risk reward, but trust me, it's not worth it. So let's see what happens with this one. We come down and we basically reject the 50%, or like halfway in between where we expected, in between the 61.8. So let's say, for example, we entered off that with stops clear of the 61.8, and then either targeting probably up here is a good target, about a 1 to 3. Take that any day of the week, see what happens. Okay, so for that one, it would have been a break-even trade, 100%. Well, actually, you can see what happened there. Actually, we wouldn't have actually got stopped out. So that's a very, very interesting scenario right there. So I didn't actually look at this beforehand. So what I said about putting stops clear of the 61.8% actually would have worked a treat here, because you can see, although we rejected the 50% and this would have been a break-even trade, we saved ourselves from a loss. So we might have even re-entered that, because it wasn't a loss, it would have been a break-even. You might have got out of break-even and then it rejected the 61.8, and then we would have put stops below, say, the 78.6. But that is a very, very good trade example about why you should put your stops safe of these certain levels. Because as you can see, the trade that we did enter did go up to like almost take profit. So we would have definitely moved stop loss at least to break even, or at least to into profit. So we would have banked something, or we wouldn't have lost anything from this trade. But as you can see, all price needed to do was come back down to the 61.8, and that's where we saw the proper move. But by looking at things, you can see this is at the end of the market close. I didn't realize this would have been like a market close, so you'd be very unlikely to even enter that trade. So you got to be realistic when you're back testing. You got to be realistic. Like when is that? You probably be looking to enter that in the afternoon of a Friday. You're not really going to be looking to enter a swing trade on the afternoon of a Friday. So being realistic, I wouldn't even say I'd enter that. I would say there would have been a break-even trade. But it's just good to understand where you put your stop losses is very key, because if you would have put your stop loss very close to the 61.8%, you would have been tapped out. But of course, that's only if we didn't move our stop loss into break-even, which is why trade management is very, very important. Let's go on to another one, shall we? So any questions on that? Any questions at all? Right. So yeah, that would just been a nice one, nice trade example. I think I was going to talk about USD JPY from a while back. All right, let's get into it. So I've spoken about this kind of these trades in my premium group before, so it's quite clear on my mind. So I think I should be able to just replay it and we'll get straight into it. So this market, let's talk about it. USD JPY. How do you determine your psychological levels? Psychological levels, just look back on the top of my head. Just look back in the market and just find a psychological level, which is like obviously rounded numbers like 104.0 or whatever it is, whatever currency pair you're looking at. Just find these key levels throughout the market where it's being used as support and resistance, and these psychological levels will rarely change. But one thing I would recommend is putting it as close to like where price currently is. So if you've got a resistance level at a psychological level that's closer to where price currently is, then it's more than likely going to respect that than it would respect a psychological level from like 5 years ago. So the kind of closer to price the psychological level is, the more likely it will respect it. So that's one thing I would talk about it, but I wouldn't get too much into it. But yeah, let's talk about this trade example and just the market structure in general. So what can we see to start with? We can see that price is uptrending, and we're basically going to look for, again, where price is going to pull back to and the exact reasoning why it pulled back to there. So let's talk about it. So I'll visualize the market by drawing in like a trend line through here, and we can say the market was uptrending. You can even say potentially like a rising wedge or something like this. I don't know, just something to visualize the market where we're making this impulse is a lot bigger. Where is it? If we was to go from here to the top, that's a 180 pip move, and then the next impulsive move is from here to here. It's 118. So we can see the impulses are getting smaller. So we can see that the bullish momentum in the market is running out, and it's early signs that the market's going to start reversing us and we're going to potentially turn bearish. So where's the confirmation for that? Where are we going to start looking for our selling positions? Is once we get a shift in market structure. So we can clearly see that the market has broken out of here and we've started to actually make lower lows and lower highs. So this is a nice impulsive move in the market and we're actually trending down now. However, to me, what does this look like? This looks like a head and shoulders pattern. So whether we trade this or not, it's nice to know how the market moves and why it moves. So if I was to draw like a resistance level through here, okay, draw a resistance level through here, we can see where buyers are getting trapped into the market and that this could potentially be a head and shoulders pattern. So let's talk about it, okay? So we have this as a resistance level. We have this as a resistance level. Now, what are some people going to do once they see this breakout right here? Once they see this breakout right here, what are they going to see? A break and retest, and they're going to be trying to buy on this resistance. But by understanding that this bullish momentum is slowing down, and I believe on the higher time frames we are bearish, by understanding that, we know not to take a buy position there. We know that this is slowing down in momentum. This right here is like an impulsive move. This is a big correction, so we're looking for the continuation to the downside. To be buying that is going against the trend. So yeah, that's one thing to take into consideration. Make sure we haven't got no questions. Your highest time frame for analysis is 4 hours. So no, it's actually it goes all the way down from monthly to 5 minute, pretty much. No, not 5 minute. I'd say the 15. I rarely use the 5 minute, just sometimes just to get the structure right. I would only enter off the 15, no 5 minutes. But sometimes on the 15-minute time frame, I would jump down to the 5 minute just to make sure my zones are correct on the 15 because it's more precise. But yeah, monthly and weekly, their analysis, and it normally stays the same for a while. So it's normally daily, 4 hour, 1 hour. That changes on the weekends. But as the month's just gone, it's a new month. We did do monthly analysis. Anyway, back to this. So we can see price broke through this resistance level here and then began to pull back. And you can see the slowdown in momentum here. If I zoom in, you can see where potential buyers would have been stepping into this market right here. So we've come back and we've used this level potentially as support. A lot of people are thinking the market's going to go up, and they get burnt, and the market continues with its original trend. So the strength of these people up here are going to outweigh the strength of these buyers, because the market is clearly overall downtrending, and we have more reasons for the market to be going down than going up. So now, what have we had now? We've had the breakout to the downside. Okay, we've had a breakout of this trend. However, we haven't seen much of a pullback. Okay, this is very impulsive. It's a very impulsive move. So we can say potentially we're going to see a much larger pullback to this level, to potentially up here. Now, what's making us think that, and what is potentially making early retail traders or people just entering the market too early, is they're thinking, okay, let's just continue with structure. They're thinking, okay, well, let's use this level here as support and keep selling it off resistance, boom, boom. And that's right there, cool. They profited a little bit there. And then what are they thinking? Okay, let's use this level as support. They sell here. And then what happens? They obviously don't. They get tricked into the market because it makes like a bearish candle there. So people are selling, but there's clearly not enough momentum in the market to drive this down. We're slowing down. So it looks like we need to come back up to this level. And the reason being is because of this inverse head and shoulders pattern. If I was to just draw this, put a shoulder, shoulder potentially where we're going to come up to, and then change this to the head. This is what we're expecting to be formed. And why this level in particular? Let's draw in our Fibonacci from swing high to swing low. We could say that this potential level up here is between the 61.8 and 78.6. So this is where the market needs to go to. So it's just to understand where the market's heading. So we wouldn't particularly enter this trade. Like, let's say if price pulled back up here, we wouldn't particularly enter it because we're still, for example, we're still using this level right here as a key level in the market that might need to be broken first. As you can see, we're using it as resistance, support. So this is just to understand the structure of the market and then look for trading positions or reasons to not enter the market. So yeah, let's have a look at what price does to start with. Okay, so as you can see, very interesting price action. What happens? We're basically enticing a lot of people to enter sells too early on this trade, because what are they seeing? They're seeing rejections off the 50% right here and right here. And then what happens? Price comes up to tap basically the 61.8% first. As you can see, if I just drag that up, tap the 61.8%. I hope that's clear. Tap the 61.8% and then head down in the market. So you don't want to be entering the market too early, but we can clearly see that the market is now bearish. But this is more just to understand not to be selling yet. We're just waiting to see what the market does. And it's interesting to see why the market does certain things, why it's doing certain things in the market. And for anyone in my premium group in here will know why certain things like this happen, why the market comes up to there, what's happening around here. So yeah, and yeah, people will be able to understand that. But now we can actually look for our trading opportunities, because what have we got now? We've got a head and shoulders pattern, and we've had a break through the neckline. Okay, we can say that this level through here is the neckline of the head and shoulders. So what we're going to start doing is we're going to be looking for where is price going to pull back to. So this comes down to a couple of things. If you remember, comes down to basically trying to stack up where is the most probable place for price to pull back to, and then making sure our stops are clear of that level just in case. So where can price pull back to? First reason for where price can pull back to is the neckline. Previous level of sensitivity through the market, we can say that price needs to pull back to here before heading down. So no matter what, whether we enter down here, our stops need to be clear of this because of that possibility of it pulling back to there. Where else? What potentially could make a certain level stronger? Fibonacci level. Let's draw our fib from swing high to swing low. And we could potentially say that this level of support lines up with the 38.2, or in between the 38.2 and the 50%. So what does that mean? That means our stop loss would need to be clear of the 50% Fibonacci level, just in case we do come back to tap that. So let's see what price does, and let's see what we can kind of take from the market. Okay, so I drew my fib way too early. So let me draw this down a little bit. Okay, so now we can say in actual fact, the 50% is the strongest, which means potentially putting our stops above the 61.8. So that was my mistake. Let's have a look what's going to happen now. So we can say 50% is the most probable place for price to pull back to. And what is happening right now? What's happening right now in the market? We're making an evening star off of the 38.2. So we've seen a slowdown in momentum followed by a bearish candle. What's this enticing people to do, or just it's persuading a lot of people to enter a sell position off there, which fair enough. If you want to enter a sell position there, by all means, but this is what you don't want to be doing. So if you're entering a sell position there, you don't want to be putting your stops just above the wicks. Why? Because you've already pre-planned that the highest probable place for price to pull back to is the 50%. So you want to be putting your stops way clear of that level. No matter where you enter, your stop loss positioning should always stay the same, and you should always know where the most probable place for price to pull back to is. So what a lot of people out there are doing is just ignoring that and just tightening stops, and then what the price does is come back up and they get stopped out, and then it continues in their direction, and then they get annoyed. But how can you get annoyed? Because you knew that there was a possibility of that happening. So that's what you don't want to be doing. But let's see what actually happens with this price. So let's have a look. Okay, what does price do? Price now rejects the 50% basically to perfection. So let's say we're entering off that 50% with our entry, which we won't go into too much, but keeping stops clear of the 61.8, and let's say we're targeting the low down there, which is 3%. So let's see what happens. Price continues, smashes through. So yeah, that's basically it on that one. You can see, this would have been like a straight take profit, but you can see the market structure of this pair, head and shoulders pattern, and the reasoning why things are happening and why price is pulling back to certain areas and where you should be putting your stop loss and stuff like that. Is there any questions regarding that? Yes, Sava vibes. Have I been on here for 40 minutes already? Guys, if you're not already, make sure you're subscribed to our YouTube channel. We're going to be posting a lot more content this year, vlog style videos, not just chart work, like, do you know what I mean? Like just a lot more content. So make sure you follow up, subscribe, like the videos. Try to get us to 1,000 subscribers soon. That would be sick. But yeah, I mean, I wanted to come on here just to do some little breakdowns. And then if anyone wants to like know more about even like our premium group, because a lot of what I spoke about is what we talk about in our premium group, but in a lot more detail with the entries and just like the take profit to stop loss, stuff like that. And even with trading opportunities, you'll always know where to put your stop loss and stuff like that in our premium group. So let me know, message me on Instagram. My DMs are always open. But yeah, I mean, as long as no one's got any other questions, we'll call it a day, guys. No one got any questions now? I don't know how to end it. But yeah, cool. Just drop me a message. Yeah, I mean, take care, guys. Enjoy the rest of the week, and I hope everyone has a good trading week. So yeah, take care, guys.